Twitter is such a large platform, but the company itself seemingly isn't doing the best after some recent deals in the financial market. According to many sources, the Twitter stock isn't actually doing too well right now. But what is actually going on? Well, stay tuned because today we're going to discuss Twitter stock is nearing a bottom. Trader says after ARK Invest buy-in and some other finance news. First up is Twitter stock is nearing a bottom. Trader says after ARK Invest buy-in. Twitter's actually nearing a turning point in terms of the stocks of the famous company. Most companies have a really great stock market, and it's actually how they get investors to invest their money into the project. Twitter for a while now has had a pretty crazy stock market, and this most recent buy-in has actually made it near its bottom for the first time. Shares of the social media company hit lows not seen since 2020 on Thursday, stemming a decline that began in late October and accelerated after Monday's announcement that Chief Technology Officer Parag Agrawal would succeed Jack Dorsey as CEO. ARK Invest Cathie Wood confirmed her firm bought 1.1 million shares of Twitter after the leadership change, telling CNBC Pro on Wednesday that she liked Agrawal's vision for the company and Twitter's verification power as it relates to the NFT craze. It's now looking like the stock market's about to be close to a really pivotal juncture. According to Mark Newton, Fundstrat Global's advisor, global head of technical strategy, we're starting to see signs that this could be bottoming out over the next couple of weeks. Newton said it's dropped almost 50% now from the mid-February peak, and oftentimes, technically, that's a very important sign if you see an absolute 50% retracement. The risk-reward for me is increasingly getting very, very good, he said. I think the stock market bottoms out in the next couple weeks, should start a slow rise up to the low to mid-50s. And now, what else has been said about Twitter's stock? Early December 2021 saw all the fall of Twitter's stock by about 2% and to trading just around $42. That's extremely low for a company like Twitter. The company itself and the app has around 3.78 billion social media users from all around the world. Innovation's off the charts in this sector. The competition is really heating up, said Bapis, who's managing director of Vios Advisors. Because advertising dollars will add to revenue streams, these companies will continue to make money while innovating and becoming something in the future. So I just think the whole technology space, which social media is a huge part of, is going to continue to grow. It's going to continue to be in our world, and we as human beings are more dependent on it than we ever have been. It's crazy that something like Twitter can have this sort of fluctuation, but I guess that's the era we live in. Now that stocks have become something more people know more about, and that things like crypto are taking over the market, it makes sense for things like this to happen. What do you think about all of this Twitter stuff? Let us know down in the comments section below. And now, on to some more finance news. Next up, European stocks hit as Omicron triggers market sell-off. The Omicron variant of COVID-19 is slowly taking over the world and cases are rising, but one thing it is affecting is the stock market. According to UKfinance.com, European markets are down on Monday as governments around the world introduce new restrictions to curb the spread of the Omicron variant. In London, the FTSE 100 fell 1.1% at close, while at the French CAC tumbled almost 1%. The DAX closed roughly 2% in Germany. Till the macroeconomic landscape stabilizes, investors are acting cautiously and withdrawing their investments from risky investments that are more positively linked to economic growth, said Naeem Aslam, chief market analyst at Ava Trade. The Omicron virus has started spreading very rapidly, and according to the World Health Organization, it is doubling around every 1 to 3 days. You wouldn't think this would affect the stock market as much as it does, but in reality, it really takes a toll on it all. Market participants have turned highly skeptical as possibilities of leading stock averages recovering lost ground the remainder of 2021 have diminished, said Kunal Salhi, CEO of Canine Group. Choppiness in markets is likely to continue in the near term unless healthcare authorities or the vaccine makers come up with a consequential update with regard to the ongoing batch of jabs. Investors are now looking forward to some meaningful data and insight that can help them to ascertain the extent of damages due to the Omicron variant, as healthcare authorities, alongside the vaccine makers, continuing to contemplate the repercussions. And now, what else has been happening around the world with Omicron and the stock market? Around the world, the Omicron variant is also affecting stock markets. Just look at something like India, in which their benchmark has been been down about 10% from its all-around peak back in October of this year. European and US equities are set to follow Asia lower later on, with futures on both the S&P 500 down 0.97% and the DAX down 1.63%, both pointing lower this morning. Deutsche Bank said, "We also saw that the US stocks were down in the European close according to US sources. The S&P 500 dipped 1.8% and the tech-heavy Nasdaq fell 1.7%. The Dow Jones tumbled 1.9% lower. The nation's top infectious disease expert, Dr. Anthony Fauci, said Omicron's going to take over this winter and that Americans should brace for a tough few weeks to month. Other than the impact of the variant, which could mean inflation in many countries continues to soar, stock traders face a number of uncertainties," said Islam, including U.S. Senator Joe Manchin's decision to reject President Biden's $2 trillion tax and spending plan. Now we have stocks and oil drop as Omicron variant clouds the outlook. As the rapid spread of the Omicron variant takes over the world, there have been many concerns about the oil and equities prices. The Omicron virus has also prompted the governments across Europe to reimpose some restrictions. According to FT.com, Wall Street's S&P 500 dropped 1.7% after the benchmark stock barometer shed 1% on Friday. The tech-heavy Nasdaq Composite fell 1.8% in afternoon trading on Monday in New York. Oil prices were also under significant selling pressure. Brent, the international benchmark, fell 3.9% to $70.66 a barrel, while U.S. benchmark West Texas Intermediate declined 4.5% to $67.75. Some companies like Apache, Devon Energy, and Occidental Petroleum have been amongst those who were hit the hardest in recent times. They've all have fallen from 4%. The variant has also created some travel concerns and cancellations, which has left the World Economic Forum scraping at its plans to make sure things go as normal. London's FTSE 100 slid 1%, France's CAC 40 dropped 0.8%, and Germany's DAX declined 1.9%. Traders shifted into perceived haven assets early in the trading session, but the rally later eased. The 10-year U.S. government bond was flat at 1.4%, while the equivalent 10-year German bond yield was steady at minus 0.37%. Meanwhile, U.S. growth prospects were dealt a blow after Democratic Senator Joe Manchin said he'd not vote for President Joe Biden's flagship Build Bank Better bill, meaning the legislation was unlikely to pass in its current form, analysts said. And finally, we have the Netherlands, the first EU country to re-enter lockdown as Omicron surges. Omicron has been rapidly spreading around the world, and some countries are heading back into lockdown. But the first was the Netherlands. This new lockdown is going to break the economy once again and take it in a completely different direction, just like the first lockdown did for most of the world. Financial situation these countries are in is going to switch around. This might not be repairable. Tough new restrictions to close all bars, restaurants, non-essential shops, cinemas, and gyms kicked in on Sunday morning and will last until at least January 14. Professional sports events will take place without crowds, and homes can invite a maximum of 4 guests during the Christmas period, to be reduced to 2 after the holidays. Dutch Prime Minister Mark Rutte told journalists on Saturday that the measures were unavoidable in the case of a variant that was spreading even faster than authorities had expected. "We have to intervene now to prevent it from getting worse," he said. What do you think about all of this? Should the world prepare to head back into some form of lockdown? What's going to happen to the economy? Let us know down in the comment section below. And that's the end of today's video. What did you think about the financial information from this video? Hopefully you enjoyed this latest video. If you did, would you please let us know down in the comment section below? It would be very helpful. Make sure to like the video, comment down below, and of course, subscribe to the channel with the notification bell rung. Thank you for watching today's video. Bye.